Good morning, pregame crew. How are y'all doing today? I hope you are doing well. What a day, what an evening, and what a night. What a time to be alive. So I have my TradingView settings up on the screen right now if you'd like to take a screenshot. My yellow moving average is the simple 50 MA. The purple is the 200 simple MA. I don't mention a lot why I use the 50 and the 200. A lot of algos are programmed at those historical levels where if it's breached in a negative way, they go bearish. If it's breached in a positive way, they go bullish. So I like to track those. The 100 MA doesn't trigger as much algo buying and selling from my experience, so I have left it off. I like the 8 and 21 EMA because it's part of the Fibonacci math series, and it seems to be very algo sensitive as well. Remember, we're in an environment where more than 90% of the trading is done by computers. So I want indicators that are algo sensitive, and then the yellow candles are inside bars, so they kind of pop out at me. Then the CM Ultimate RSI multi-time frame, if you are sophisticated enough to use this indicator where you can look at multiple time frames, it's pretty cool. I like the green to show me oversold conditions, the red to show me overbought. It just kind of jumps out at me for no other particular reason. I don't use it for all the functionality that it has. And then I like the TTM squeeze, thinkorswim default. I like to look for squeezes where volatility and pressure is building. Good morning, Bobo, Greg, Luzmar, Steven, Frank, Peanuts, Jason, Mr. Newtalk, Chris, Susan, and Dragon Man. Thank y'all so much for joining us. So I'm just going to leave this up for just a couple more seconds for you to take a screenshot. And I do realize when I say that there's a delay, so I'm trying to say it and then wait a little bit so you can take a screenshot if you want my settings. And it also helps if you're looking for some highly volatile coins, or not coins, excuse me, stock names. They're over here. So this is my watch list for today. So I am Chart Gal Lori. I am part of the Chart Guys. We teach technical analysis. So we don't tell you what is going to happen in the market because no one knows that. And if they say they do, they're lying. No one knows. We use our technical edges to attempt to see probabilities for the black screen over here. So our job as traders every day is we're using prior data that's already happened. This data, we can't act on this prior data. It just gives us what are the odds that price will go up and price will go down. And we're looking at probabilities. That's what technical analysis is. No one knows what's going to happen over here. Stocks like Amazon can have the most bullish setup ever. Unless you know Jeff Bezos or your name is Mackenzie or whatever the girlfriend's name is, and he's telling you at night, I'm going to sell billions of dollars tomorrow, you don't know that Amazon's going to go down. You can just look at the setup and say, oh, solid bull setup, I'll go long. And then if the setup doesn't work, you stop out. So I'm going to clear this off now and get started. Hey, Mustang, Roger, Mint, Don, Isaac, so nice to see all of you. Thank you for joining us. So if you're waking up to the market now and you're just turning on your screen, we have a sea of red, an absolute sea of red. So what I do is I go over the Fab 4 futures, the commodities, crypto, some movers and shakers in pre-market and our technical setups, and then we end with SPY and I give you the levels for the day. Overall, in the big scheme of things, for those of us who lived through last year in the pandemic trading, 1% is not a huge down day. Less than 1% on Dow, not a huge down day. 2%, pretty big down day. And RTY, 2.6%, that's a very large down day. What is going on? What is going on is inflation. So let me see if I can pull this up. That is not it. Okay, so I lost my screenshots. 1 second and I will pull it up. So what is going on is inflation. So what inflation, or the fear of inflation, is what is the narrative of the market, is what's going on. So up here in the top right quadrant are names that have a high probability of beating inflation and a high level of outperformance versus inflation. So energy, that's why XLE names are doing so well. Equity REITs, consumer staples. Names that don't have a high level of outperformance versus inflation, but a high probability of beating inflation: industrials, financials, and materials. Well, doesn't this explain what's going on with the market? We have XLI, XLF, XLB that are doing so wonderful, XLP, XLE, and then equity REITs. Now differentiate between equity REITs and mortgage REITs. Mortgage REITs is this bottom left quadrant. These are the worst performers as part of inflation. So we have two different REIT sectors, equity REITs and mortgage REITs. That's differentiation. Mortgage REITs don't do so well. Consumer discretionary, i.e. Amazon. IT, so all the technology companies, the FANGs. The U.S. equity market in general. So then precious metals and mining, they have a high level of outperforming the inflation, but not always beating inflation. So they would do slightly better than inflation, but not totally outperform it. So this explains what is going on in the market. Now, let me back up and say, with technical analysis, do you need to know all of this? Nope. Dan's been identifying all of this for months now, the rotation into XLF, away from technology. And the narrative supporting this thesis is inflation. But if you were trading 4 years ago, what was the thesis why the market was very volatile and kept going down? Kim Jong-lee, whatever his name is, the Korean, fear of him, bombing us. So there's always a narrative in the market that price action is supporting. So right now it's inflation. So if you want to know why is tech getting beat up so badly, it is because of the fear of inflation. Now let's look at one more screenshot. PE multiples. So the names with very high PE multiples, i.e. Amazon, Apple, Google, high inflation tends to hurt them more. Why? So excuse this analogy if it doesn't make sense to you. It makes sense to me. So I've tried to explain the dollar value and how it impacts earnings. So if you're Amazon, and let's just make the number simple, and with Amazon you have to make $100 billion next quarter for the earnings expectation to meet it. If the dollar is at 90% of what it usually is, it's devalued, then that means you have to make about $111 billion in next quarter's dollars, so future value, than you do in today's dollars. So today's dollars are devalued. If you have a lot of dollars in the bank, it's like a big pile of ice that's melting right now with inflation. So let me say it in a different way. So if you are walking on a treadmill at 10 miles per hour, and then now you got a cramp and you can only walk 9 miles an hour, you're not going to cover as much ground. You're going to have to walk longer to cover 10 miles. So it's like 1.11%, whatever the ratio is. You have to walk longer to walk that mile. Same thing with dollars. You have to make more dollars to meet expectation, not even exceed, meet. So these companies that have high earnings, EPS expectations, high rev expectations, high PE ratios, they are getting hurt in the inflation printing dollar bubble that we're in. So that's what explains, I think Amazon's extremely, extremely valuable. And the final component to that is people like me who buy a lot from Amazon. In 6 months when my dollar's worth a little less, will I spend as much at Amazon? Maybe not. But these Caterpillar and Deere companies, infrastructure who have contracts from the government, we still need roads. We still need roads built. I may not need the latest and greatest skin supplement, but some of the infrastructure needs continue to happen regardless of consumer discretionary spending. So I hope that helped. And if it didn't help, I'll work on my analogies. All right, so right now let's go back to ES. I spent a lot of time on that, but I thought it was important because I get more questions as to why versus technicals. And I know a lot of you have this strong desire to need to know why. I get it. I absolutely get it. So our next support coming up on ES is 412050, 411525. In this environment, when we are news driven, RSI is not as important. We have a lot of news stories coming out about individual names. We have a lot of news coming out about inflation, and things are going lower than we think they can go. The market can go lower than you can remain solvent, I promise you. So don't try to be a hero today. So right now in the 15-minute, you have resistance up at 415175, 416125, and that support down at 412050. Right now, we are flushing. This is physics. So when things are in motion, they tend to stay in motion. And for my country talk, this is like sticking your hand down a toilet trying to grab something you dropped in the toilet, and it just keeps flushing and pulls your arm under. This is going down. It has velocity. The physics are behind it, and I wouldn't get trapped trying to fight this. I love to buy things on sale, but let's make sure we have friends with us in on the trade before we start buying this dip. So strongest is Dow, then ES, then NASDAQ, and then RTY is absolutely getting hammered. So with YM, your resistance is up at 34495, 34544. I'm just making sure I don't have anything. Everything's working. Okay. Your support is down at 34386. And then 34204. Wait, let me check that again. Your support, let me say that again. Sorry, guys. 34528. Then 34366. These numbers aren't quite working over here on TradingView. They sometimes show different numbers. I like to just triple check those. So with YM, we have a 15-minute, 50 MA rejection. 1, 2, 3 keeps happening. So as we bounce up into it, it could be another opportunity to short. If you are not comfortable shorting in this environment, don't do it. Don't go long. You don't absolutely have to go long. You don't have to trade at all. And that's the just awesome, wonderful situation with traders is unless you're a prop trader or institutional trader, you don't have to trade. So then we have NASDAQ. NASDAQ's getting hammered because they're in the high PE ratio environment. And then we have support at 13,000 psychological, then 1277650. Resistance on shorter term time frames is up at 1318925, 1321175. So we're just, as we come back and retest EMAs, it just gives another position for bears to jump in. Ain't that the truth, P Court? It's a great analogy unless you're a Peloton. Then I guess it's more like the toilet analogy, right? You stick your hand in and it just keeps grabbing you. I guess it's too soon. Okay, so RTY, same thing, 15-minute, getting rejected by the 50 MA. We're bouncing here, really beat up. Unless you're very comfortable with oversold bounces, I wouldn't try to play this to the long side because RTY is beat up the most. If you want to play something to the long side, go fishing in the YM pond. It is not the day to go fishing in the RTY pond. We want to stay with the relative outperformers. So on shorter term time frames, on RTY, let me get those 217710, 219260, support 215210. So 2150, let's keep it simple. Then after 2150, down at 2143.50. So non-day traders, weather the storm. No, don't add to positions until you make sure you have friends with you. That's just like you going into a gang fight. Like there's this big gang and they're the bears, and you're a bull, and you step into a gang fight by yourself. You want to make sure you show up with friends. So make sure you have a couple buddies that can swing hard, i.e. high volume, before you step into this gang fight. Okay, let's look at commodities. So commodities, gold's pulling back a little bit at 1842.50, then 1842.50 is a double top. Then 1846.30, you have support down at 1834.60, we just broke that by a couple of dollars. Oh, 1835.10, 1834.10, and then 1833.10. So remember, in our diagram, precious metals can beat inflation. So they can somewhat outperform inflation. So this is a pullback, but it is not an end of the bull show yet on gold. Oil, there was some OPEC news this morning. It is Tuesday. We have API estimates out at 4:30. Don't forget, we broke this support down here at 63.86. Your next, so we have somewhat of a double bottom right here, a triple bottom on oil. Your next support's down at 63.11. Your resistance is 64.55 and 64.62. Bitcoin had a dump last night, and it is bouncing quite weaker than the alts, and we can see that through the Bitcoin dominance chart. I won't go into that. If you have time, go back and watch Dan's video last night. He did live. It's on our YouTube channel. Great information. You have support on Bitcoin 54663, 54511. You have resistance at 56267, 56451. Hourly EMAs are resistance until they're not. So next time Bitcoin comes up to hourly EMA, you can short it, and if we get a candle close above, stop out of your short. ETH had this wonderful bounce up. On the hourly, we are double bottoming here, 3,900, 38.99. We have a double bottom on the hourly. We need to hold that level. On the 4 hour, that lower high is set. Now we need to get that higher low relative to 36.57. I'm going to skip Litecoin today because I'm a little far behind. No, Jorge, I didn't say sell everything. Follow your trading plan. So if you have 5 positions and you should have a trading plan for all 5. And if you don't, start writing. Pull up those charts, get a pen and paper, and start writing. Where is the next key support that must hold? And if it doesn't hold, set your stop loss and get out of it. And then if it goes back up, set an alert. Hey, if we change a 15-minute trend back to the upside, I want back in. You know, re-entry is just a commission away. We don't have to stay out of the positions that we stop out of, but staying in them, hoping for them to go up is not a strategy either. So on coin, we have enough room for a 4 hour higher low relative to 259.37, then that next low 250.51. Finally, the coin bulls stopped their black dirt breakdown meltdown yesterday with a nice push up on higher volume. We have enough room for a higher low relative to 259.37, and then that key resistance 297.50. JMIA getting slaughtered. So this is the Amazon of Africa. Citron has been all over them, hating, and their earnings were not quite what it needed to be. So I don't have the earnings numbers right in front of me, but this is pretty beat up. Let me go back out to the daily. So this has some nice volatility, but we don't have a lot of support down until 1170. So right now we're at 1832. What you can do, now this is not where price pivoted. We talked about pivots yesterday in terms of basketball, where the bulls and bears actually changed the direction of price. However, these are levels that came into play before, 1776 and then 1481. So on JMIA, on any bounce, you may get a decent opportunity to short. Right now, it's pretty much black dirt breakdown, but it should give you some nice volatility for those that are comfortable trading in both directions. PLTR. So I'm not even going to look at the clock. I'm just going to keep going. So PLTR. This is a screenshot of PLTR and the last 6 months of insider buying and or selling. Look at all the sales. No insider has bought, and this is just a 6-month screenshot. Not one insider has bought. They are selling the K-Rap out of this. Steve Cohen, who everyone loves and is a brilliant man, is selling. Peter Thiel is selling. So if they're selling and price is really beat down, they better start buying. And if they're not buying, why are we buying? So it's just another way to look at it. I see a lot of fundamental thesis out there about PLTR. I've heard it, and I think it could be a really cool company. But let's make sure we have some friends with us before we go in on the gang fight. And the founders are not going in with us to fight the gangs. They're not even going in with us. Well, if they don't think it's a value, why do we think it's a value? So we have resistance up at 1668. 1724, 1825, support 1635, and then I had the levels. What's on my other chart? Down at 16. We have a gap. Sorry, I'm trying to talk here. We have a gap over here at 1610, right here from November 16th. November 16th, we have a gap at 1610. If we could bounce from that level, it could be a bounce to play. But when Peter Thiel and Cohen, when they think this thing is a value, you'll know it. You will know through volume. It won't be me guessing, you guessing, Sally Sue guessing. We will know. And right now is not the time. So let's make sure I mean, get your flips, get your long flips, get your short flips. But as far as investing, let's make sure that we have some price prove it before we do all of that and go blue light special shopping. So this is an equity REIT, which we know outperforms inflation. So this name has had some nice pops. This has a tightening range, so we're losing it pre-market. We were holding it earlier when I was looking at it. So 1521 and 1447 are your supports. You have resistance up at $17, 1780, 1794. We have a little bit of a TTM squeeze. These names have been providing wonderful volatility. AHT, another REIT, great volatility. Just some names to think of. Space getting beat down in pre-market. We are not in black dirt breakdown, so we do have prior price history down here. We're breaking this 1486, 1421 is your next support, then 1210. So again, Branson sold all of his. So we'll know when we get some friends in on this so we can go fight the bears. Right now, I just don't see it. Tilray got an upgrade and continues to flounder. We have 1383 is the key support that must hold during regular trading hours. We are below it right now, but if we were to get above it before open, this may be a bottom fish opportunity, but this has just had nothing but downward pressure. Even when they brought friends, the bears were able to smack it down. But look for volatility in this name. Tesla is not going to expand their China shops. You have support down at 558.79 and 539.49. Really getting the beat down here. This is one of those ARC names that have just totally fallen out of favor. Just look at how, if you were to short it, 15-minute 8 EMA has been an absolute electric fence. So stay with the trend that is. Don't try to predict the trend that may be. Stay with the trend that is. So on Tesla, really getting beat down. I gave you those support levels. Resistance 605.50, 606.80. Yeah, if you could hit that like button, that'd be great. I'd appreciate it. Now I'm going to leave you with SPY, and then I'm going to go into the chat room and see if I can answer a few questions a little quickly. Let's see. 412, 41, 411, 67. That is not it. Hate when my magnet doesn't work or my fingers don't do it. Oh, shoot. Okay, go to the hourly. One more time. 411, 67, 411, 13. 411, 67, 411, 13. Okay, so here are your SPY levels right here on the right side. If you want to screenshot, 416, 418, 14, 411, 67, 411, 13. My final analogy is, this may be a terrible analogy, and if this offends you, then just plug your ears if you don't like to hear about spankings. But growing up, when I'd get spankings, now remember, I was raised way before most of you, 30 plus years ago when I was a young child, 35 plus years, I would get spankings if I did something bad. My dad just had to get a belt out and look at me and I'd start crying. My sister, he would get a belt out and she would just glare at him. Punishment, whatever it was, she was tough as nails. And she would not blink. I would blink. I feel like that's what the bulls are today. A lot of these retail investors have this diamond hand type mentality, and they're just not blinking. They're like, whatever, bring it. You want to pop me bulls? You want to spank me bears? I don't care. I don't care. I'm going to hold. These diamond hands, that the longer they hold, the longer we're going to stay in a downtrend, because we have to flush out all of the buyers, all of those diamond hands, flush them out before we can go up. The other way I say that is we got to make sure that if they're doing shots of Jaeger, which the bulls have been doing shots of Jaeger, woohoo, life is great. They're doing shots of Jaeger and then they start throwing up. They have got to yak it all up in the corner before they can start feeling better. Yak it all up. That's the same thing. We got to get them to blink so we can shift the scales back into the bulls' favor. And right now, there's just not enough fear in the market. I don't feel it anyway. 411.67, 411.13, those key supports. Do I track VIX for trade side bias? When the VIX gets really, really, really extended, I like to short it with longer term puts. But overall, I do track VIX, but it's not always a one-to-one correlation. A side note for, man, I'm just full of information today, whether it's good or bad. But with VIX, when it's extended and we have these crazy pops and SPY doesn't necessarily go down in a one-to-one correlation, sometimes those are hedge funds blowing up. We had VIX going crazy up to the upside with SPY going sideways to up when all those funds blew up because natural gas had that big bull move. We created a short squeeze and all these hedge funds blew up. Sometimes VIX is just spiking because hedge funds are blowing up, like Archegos Capital. It happened recently. Go back and look at it. It wasn't a one-to-one ratio with SPY and VIX because it was more of fear and volatility because of these hedge funds and nothing to do with SPY. So just know that. Okay, Etsy for Milan. Etsy did not have a fun time with earnings. This could be a bear flag on the daily. You see how we're below that 200 MA? Let me pull this up a little bit. You see how we're below that 200 MA? We do have a gap overhead, and that gap, 181.51, would be the gap fill, but right now, not looking good. Whatever happened in earnings, the bulls have not been able to shake off yet. You have a key support of 154. You may be able to bottom fish, and bears are going to look to top fish, maybe 165 area if you could get that high, or even 161.78. Prior support could act as resistance. Amazon is just getting the teetotal you know what out of it. So we lost the daily 50 MA yesterday. So 31.82, 31.73, we're losing that. 31.78, 3,000 psychological, then 29.96. Look at this bear volume. We know that's Bezos. We know that. He's selling. Amazon's not going to be able to break the trend upward. It has 2 X's against it, Amazon. Not only is it in a sector, consumer discretionary, that's getting hammered because of inflation, it also has its owner doing predetermined sales in the amount of billions of dollars. 2 X's against it. What does that mean? On balance, it's short Amazon. That's what that means. It's an underperformer until it's not. We've got Bezos is not done yakking it up in the corner, and when he is, we'll know it. Okay, Kevin, Facebook, and this will be the last one. Facebook on the weekly, we are in an uptrend. We need to hold 296.04. We are looking for a higher low relative to 296.04. It's actually set up better than most. I should go back to NASDAQ. Same thing. We are looking for a higher low. Our support 12,609.75 and 12,207.25. And when the 4-hour gets oversold, which we are, RSI of 25 in a weekly uptrend, we start looking for that weekly higher low. So NASDAQ may get some reprieve, and it could just be a dead cat bounce. All right, now that's it for me. Love you all. Thank you for joining us this morning. I hope you got just a tidbit of information or helpful information. Stay safe, use stop losses, create a trading plan. And I will see you TCGers in the room where Dan will be live. I will be live at noon Eastern today, and then Dan will be live again at 3:15 Eastern. All right, that's it for me. See y'all later.